Hello and welcome to my morning report on Monday the 2nd of March with me, Rich Perry, market analyst at Tantech Markets. The European trading session has got off to a reasonably positive start, and that's because we've had a few supportive bits of data out certainly this morning and also over the weekend, starting off with a rate cut from the People's Bank of China by 25 basis points to 5.35%. That certainly has helped to stabilise sentiment and push the mining stocks higher, or certainly risk appetite anyway, helping the mining stocks. And also we've had a fairly decent round of PMIs out of China as well. The official number came in very slightly above expectations, and also the HSBC PMI for China came in above expectations as well. So that helped sentiment, and that's moved into the European PMIs as well. The Eurozone composite number was basically in line, just very slightly, very slight miss you could argue, but certainly it looked as though it's continuing to improve. It's at 51.0, which is just suggests a very slight improvement across the region. The only real disappointment was France, which missed expectations, but pretty much across the board other countries either came in ahead or just pretty much in line with expectations there. So pretty decent showing across the Eurozone. We're now waiting out for the UK PMI for manufacturing to come in at around about 53.4 is the expectation there, and that's what we're looking out for there this morning. And let me just show you that is the Eurozone HICP, which is wrong. Here's the UK PMI, 53.0 last time out. And the expectation is for a slight improvement on that. Now, we do have Eurozone flash CPI today as well, interestingly enough, and that comes expected to come in around about minus 0.4, so a very slight improvement actually on that flash inflation number. And also the core inflation is expected to show a stabilisation as well, around 0.6% positive on the core inflation there for the Eurozone. So that comes out at 10 o'clock and certainly could have an impact on the euro. Euro is fairly stable in front of that number. And then into the afternoon, we've got the US ISM the US ISM PMI data for manufacturing, and that's expected to slightly deteriorate actually to 53.1. So that comes out at 3 o'clock, so I'll be interested to see what impact that has this afternoon. But lots of impact on these markets today from these PMI throughout the day, and that's pretty much why the market is slightly up on sentiment. That's reasonably positive at the moment, but we'll see how it develops as the UK and US also come with their data. But what we have seen so far is the dollar, which is starting to break out again. You actually had an intraday multi-year high on the dollar index, 95.505, which was above this high at 95.481 that we saw towards the end of January. So it's beginning to break out. There are signs across the forex markets, forex pairs, that we are getting signals that the dollar is beginning to strengthen again. And it could be close to a new another breakout. And very quickly, the VIX index continues to fall away, just reflecting this improvement that generally we're seeing in the equity markets. So that takes me to my chart of the day, which is the Euro Yen today. Now, what we've seen in the Euro Yen is this is the daily chart. Across the past few months, 135 has been this key level that I've been looking out for, a bit of a pivot level, and I'll show you that on the intraday chart as well. But it's now breaking below that, and it looks like it's sort of forming this almost descending triangle pattern, but that is coming at the end of a mini recovery. So it's not really a descending triangle, but it certainly has an aspect of a downtrend followed by a bit of an element of support. So once that support breaks to the downside, if it breaks to the downside, you would be sort of moving back towards this 132 area, which is the next basis of support. But look at these momentum indicators. It's the interesting thing that I see from this chart is the RSI never really got above 50 failed at that 50, so that suggested that was a bear market rally. MACD lines never moving above neutrals, and they're beginning to turn down, and also the stochastics falling quite sharply still. So it is interesting, and it looks like it's putting pressure on this support, which comes in around that 133.50 level. I'll show you that on the intraday chart. These are the lower highs that we've seen over the past few weeks on this chart, and the consistent support that's now coming in around that 33.50 mark needs to continue to break lower. But look at this resistance as well. We're going to be getting now around the 134.50. Acted as support, is likely to now return as resistance. So it sort of would suggest that we've got a band. If I to zoom out slightly there, you can see that this 135 pivot level that comes in consistently as a basis of support and resistance. And if I put the crosshair at 134.50, that gives you sort of a band of 50 pips worth of resistance, that if you saw a rebound in towards that, you're not too far away from it now. You're at 134.25, so about 25 pips away from that resistance coming in. So it's not a million miles away from where we'd be expecting the selling signals to come in. The hourly RSI coming back towards this sort of mid-60s point again, which is where the selling pressure has tended to come in over the last couple of weeks, and also MACD lines unwound to neutral. So there's lots of reasons why this rally is not too far away from a point at which you could start to think about selling again, and it could be we'll be waiting out for a sell signal, but I think within that 50-point band you could get one, and that would give you another chance to go short again, because I think it looks like it's been putting pressure to the downside and on that support at 33.50. Anyway, I wish you good luck in your trading on the euro yen today, and I will speak to you later. Thank you.